This is Justin on Monday, no, December 5th, 2022, looking at SPX on the daily. So kind of opposite of Friday where we gapped down below the 200 and ran up. Today we gapped up above the 200 and ran down. Really nice trap because initially right out the gate we had some selling, some people buying, got back above the line here, all the while staying below the 10, but then sold off sharply. Took out that low. This is what's amazing with technical analysis and just looking at levels. So that initial level that we broke through is right where we retrace back up to. If I can draw a straight line. Oh, that's pretty good. Okay, there you go. Retrace that, making a wedge here. Then that broke down. Here's the low of the day at that point. That broke through it. So we put in another smaller wedge here. And then that broke down. Where that broke down, this one retested. Really nice evening star reversal. Here's the new low of the day. We kind of retested that same level here, rolled down. We just kept rolling over. This retest here didn't even make it back up to the previous low like the other ones have. But at this point, it was really just choppy into the close and kind of consolidated, similar to all day. So just continued to push lower. And each of these breaks, each time it came into the 10 here or pushed a little bit above it, we just rolled over. This was a little bit above it. So the way to trade this today was looking at puts. And so let's start by looking at the 4,000 strike put. It was pretty flat early on. This is where you could have just been buying an absolute zero sort of play, even early on in the day. You had this really large spike here right at 9 o'clock. I think there was some news or something that came out and that pushed down really low. And then this retracement gave you another opportunity to get in before that kind of rollover. But just to stay in that all day, really. So went from being able to buy it for $1, and by the end of the day, it was back down to next to nothing. But because it kept rolling over, it gave you these bigger S curves, and probably, it's kind of hard to see here, but just thinking where would have been a good place to exit. Obviously, you didn't know it was going to keep rolling over all day. Maybe after the second or third rollover, it's like, okay, let's take some profits. We got into kind of some low RSI here. So even down in here would have been a good place to get out where the RSI is kind of pegged. Because once it retraces, you're going to lose a lot of value. So let's look at the option price at 1124, see how much value was lost. So 1124. Yeah, so it had run up to about 5, pulled all the way back below 2. So this is something where you would have wanted to exit somewhere in here, like on a big candle, just get out of some, wait for a pullback, buy back down at the entry, or take house money at that point and get back in at a little bit of a higher level than you bought originally. All right. Looking at the 10 EMA, didn't get a 10 EMA candle till this one. We would have waited the first hour because it gapped inside, or didn't gap. Didn't get a trigger on a bear candle. Did get some triggers. Nope. Well, technically, yeah, that would have been a trigger on a bear candle. It would have been moving up, looking to go bullish right here, and that would have reversed. That would have stopped you out right away, and then a reverse kind of play. That's your first chance. I don't like that though because it's 5 bear candles in a row, and only one trapping candle. I would have liked to wait for 2 in a row, I think, but I got to go back through and test that out some more. At this point, you're breaking the low of the day, so you want to see some more consolidation there. But I think I would have been in somewhere in here bearish. Let's just say I got in on this candle at 1051. Let's just say. So 1051, I'm in on this candle, so I'm getting in at 2 and a stop, no, 230. And a stop down probably at 130. So I would have been in before this move here. And if I was in at 230, I would have doubled the option pretty easily up to 5. It would have been really hard to take a profit off of that upper wick. So probably just looking for 2R, so 230 up to 430. That would have been a nice trade. And then looking to re-enter another retracement. None of these are 10 EMAs. Here's another one where it's a single candle after a bunch of bear candles, so I don't like that. Doesn't really give you a good 10 EMA. Nope, I would not have gotten back in a 10 EMA because, well, maybe not till here, but at this point, it's, you know, if you hadn't made anything on the way down, it's FOMO. If you had tried to get in here, let's just see at 11:45. So breaking below the 11:45 candle. So wouldn't have been able to do that here because I would have wanted it at like 5:40 and or 5:25, and stop down would have been at 3:25. So that's 200. So that's double $100 risk. So would have looked for a different option at that point, but it did have some bigger pullbacks because the premium is getting sucked out of the options. So, but none of those were 10 EMA setups, just retracements here. So yeah, if you were in early on, like not even early on, if you were in at any point in here, you made some money. If you held through all this, great. But I don't think I've got the rules saying I would have. I would have been in and out of this pretty quick for a move like this, or at least, you know, at least something where I'm in here and out over here, something like that, or maybe in here and out over here. Although I don't like the single candle there. We're back into this range between the 100 and 200. Let's go look at what the SPX did, because I'm just, or what the SPY did, see if things are kind of similar to the way it gapped. Let's see, I can zoom in some more. I like this view here, just looking at what we did. Last time we were above the, or at the 200. So same thing, gap below the 200, ran up, gap above the 200, ran down. Let's go look at the, it's SPY. Yep, just want to make sure the links are working. Okay, so this ran down, didn't get a bull candle close. Yeah, it looks really very much the same. SPY and SPX generally move about the same compared to each other. The one other thing though is you can look at different options that are less expensive. So let's see what was going on over here at 10:27 when this started to break. So let's go look at the money option, which would be like the 402 put. So I got to edit this a little bit. I could go over to the options or the trade tab and do this, but I'm just going to modify this to say SPY and 402 put. There we go. And I'm trying to get rid of this because I don't want the theoretical on there. It's not staying off. There we go. Yes, I'm going to delete it. I had it set up so it was staying removed, but now it's just back. All right, 10:27 was right here. So this is, let's see, this is a pretty nice setup. So you're in at 0.8. So entry at 0.8, stop would probably be around 0.5, possibly 0.55. So 0.8 to 0.55. I like that because you can get 4 contracts. So you're into 4 contracts, you're looking for the $100 risk, and you're looking for it to run up. 105 would be an R, so you're past an R here. I would have been looking for the previous pivot around 130 or 120. Either of those would not have filled. So I've been holding through this, and then would have been out on this move here. When this didn't fill at 120 or 130, I would have bumped it up probably to 150. And yeah, that would have filled on there. So you're into more contracts. So that's going to be a little bit more of your broker fees. Just, you know, it's still pennies compared to what you can make. But that's another way to set this up, looking at the comparable option on the SPY. So this is more what I want to get into. I'm going to go back through and look at more of this, comparing SPX, SPY, going back through, looking at charts, even more than just what I've done with comparing the different strikes and different directions on the channel here. So I want to get more of this figured out and evaluated. You'll see. We'll see where this channel is going. I did want to look at, so at 10:27 here. So similarly, we're breaking down below this on the call. So that at that point was had just made a new low on the day. So this is a good signal also on the call that, yep, it's going to keep pushing lower. Back over to the put, you could have held on to this for a while and just trailed your stop. So if the stop was originally actually a better way to do this, and this is where I'm not used to getting into multiple contracts. So you're able to, with when you're into 4 contracts with this setup, you're able to do this more. You're able to take partials. So one way to do this would be to exit a partial 1.5 and then get your stop held up a little bit better than break even. And if you can actually pay for the whole trade, then you're in. At that point, you'd be paying for the whole trade. Like if you get stopped out, you're still making gains no matter what. So this would have pulled back quite a bit. That I think having your stop a little bit above, well, probably last pivot. So having your stop right here at maybe 0.82, maybe 0.85, that still would have held. That would have been the last pivot there on that move. And then as this goes up, you're going to either continue to set targets for partials. So on this run up, it gets past 1.5, see if you can get 2, and then just play those whole and half numbers, like getting out at 2 and then seeing, okay, can I get my stop up? Can I put my stop at 1.5? Well, you got to wait for this to come in. So my stop is still probably around 1 at this point, and then 125. So your target, you can move out at maybe 0.5. I don't know. We'll have to figure this out. This was a pullback through 1.5. So you don't want your stop that close yet, not until that actually bounces. Once that bounces, then you get your stop up to 1.5. So if it comes down again, you could be out or just right below it, maybe 1.3 or 1.35. If you're looking to just continue to trail, then every time it pivots or every time it comes back into the 10, that's after that happens, you're going to move your stop. So this comes back, well, it never really left the 10. This starts to run, comes back to the 10. After this pullback comes in, you can put your stop at 2. So you're moving it from 1.3 up to 2 right here. And then it comes through the 10 and pushes up one more time here, starts to pull, making lower highs, or at least lower lows. So you're going to be holding your stop here around 2, maybe 225 again, a little closer, and then get your target set back up. If you didn't get out here and it's been all day, you probably should have gotten out up here, or gotten out at 3 or 3.5. So you're not in anything, but if you were still in, then just trail it, and your stop's at 225 and then 250, and that would not have stopped you at 255. And then it runs back up above 3. So at this point, have your target up at 3 just to get out of something or get out of the rest of it. So that's one idea, one way to play this. That is the 402 strike put that expired today on SPY. And so this is a nice way to go with $100 risk, and you're playing the option that's right at the money. It's just another way to kind of play this. So there we are. We looked at SPX, SPY today, and got a sense of how things moved after the fact, but you could have set this up with, the 10 EMA setup. So if you need help with learning that, doing that with just the stock, then check the link in the description and sign up for a free account and just learn about the 10 EMA strategy and the amazing things that we're doing to have an incredible trading community. Hope this helps. This is Justin. Thanks.